Okay, guys, so we will start our third webinar. So thank you for attending, and we are very excited to see you here and to start trading with OneRoyal Broker. Our topic today is how to trade Forex. Before starting, a quick disclaimer. The information provided in this webinar is for educational purposes, so please do not take them as financial advice. Do your own research before start investing or trading. How to trade Forex. So these are the points that we will cover today. What is Forex? The major currencies, how Forex quotes work, how do you trade Forex, how much does it cost, and finally we will go to MT4 to show you a real life example. So the first part, what is Forex? Forex, or foreign exchange, is the buying and selling of one currency in relation to another. So if I need to give you a real life example about a foreign exchange transaction, let's say you are a US resident and you would like to spend your trip in Europe. So you need euros to be able to spend in Europe. So what you will do is you will sell your USD and buy euros. So this transaction is an FX1, as simple as this. So whenever you trade, you need to get rid of one currency over another. Next point is all currency are priced differently, so the price difference can make you a profit or a loss. So if you open any FX exchange or you go to an exchange office, you will see that the prices fluctuate. So it moves from time to time. And this fluctuation, you will benefit from it to make either profit or a loss. The FX market is estimated to be or to have a turnover value of $5 trillion a day. So it is the biggest financial market among all others. So you can expect how much it is liquid and how many opportunities can offer. Individuals, companies, banks, funds, and governments buy and sell global currencies all day long, every day until Friday. So the market closes on the weekend. You can trade from Monday until Friday. The main players or the big players that they can move the markets are central banks, hedge funds, and corporate banks. The small players are considered, like, let's say, the retail traders as us, me and you, let's say the normal traders, which have small amount of money comparing to these big institutions. Next, Forex trading is not centralized as stocks and futures. So in stocks and futures, all transactions pass through 2 or 3 main exchanges, similar as New York Stock Exchange. Forex, in Forex market, you need just a broker. So it is not centralized, it is decentralized. So if you would like to start trading, you can go to OneRoyal.com. This is the website of OneRoyal Broker, and sign up for a Forex account. Okay, now let's discuss the 8 major currencies. We have 8 major currencies, which are US dollar, euro, Canadian dollar, pound, sterling, Japanese yen, Swiss franc, Australian, and New Zealand dollar. So mainly those 8 major currencies, they are considered major because they represent the biggest economies in the world. When it comes to the schedule that you would like, if you would like to trade Forex, you can trade starting Sunday to 10 p.m. GMT time until Friday 10 p.m. GMT time. So as we said, on the weekend, the market is closed, but during the week, you can trade all day long. Next, we will talk about how Forex quotes work. So whenever you need to trade, you need to select a pair. So currencies comes in pair. As we said in our previous example, you need always two currencies to be able to execute a foreign exchange transaction. So you will open your MT4 and you will see that those currencies come in pair, Euro USD, USD JPY. If we look to the right of this PowerPoint, I will talk a little bit about the currency code. So here we have USD. How this abbreviation, they came up with this abbreviation, USD. Mainly the first two letters represent, let's say, sorry, mainly the, let me do something here. Okay, so the two letters here represent the country, and the D here represent the currency. So US, United States, and the dollar is the currency of this country. However, if we are talking about GBP, let's say, the first two letter is Great Britain, and the P is for pound, the currency of Great Britain. There are three types of pairs. We have major, cross, and exotic. So what are these, or how do you differentiate between them? The major pairs contains a major currency and a USD. So it is a must to have a USD in a major forex pair, similar as Euro USD. So Euro USD, as an example, it is a major pair. Euro, it is major, but we have here USD. GBP USD or USD JPY, these are examples of major pairs. Cross pairs are pairs that have major currencies but without USD. Example, GBP CAD or GBP JPY, and etc. Exotic pairs includes an exotic currency and any other currency except, let's say, the US dollar. Example, we can talk about Euro NOK, which is Euro and Norwegian krona, or Eurozar, Euro and South African Rand. So these are exotic forex pairs. How do you trade forex? We have mentioned 6 steps. Step 1, pick the currency. Then you will go for step 2, which is decide whether you think the pair will rise or fall. Here you will do your analysis to be able to come up with a trading idea. Step 3, you decide how much currency you want to trade, so the position size. Step 4, you will either go long or short, so you will take the decision here, you execute. Step 5, you will pay the spread, which is a small cost for the broker whenever you want to execute. And finally, you need to close the trade, either if it's in a profit or in loss. How do you trade forex? Step 1. So we will go now in detail step by step. And finally, I will give you an example on MT4 so you will understand it clearly. Step 1 is you will pick the pair. So as we said, here we have, as you can see, the 3 classes, major, exotic, and crosses. And when we will open MT4, I will show you how you can pick a pair. So you should pick one pair to be able to trade. And the good thing that OneRoyal have all the classes, the majors, exotics, and crosses. Not all brokers provide the all assets or the all forex pairs. How do you trade forex? Next, we will talk about this step 2, decide if the price will rise or fall. So after picking your pair, you need to choose whether you go long or you will go short. So when you go long, that means you're expecting that the price will go up. If you're expecting that the price will go down, then you should go short. So in this step 2, you should decide whether you buy or sell. Okay, and also you can attend our weekly trade setups. It is on Thursday, where we will provide sometimes trading opportunities and market updates so you can have some ideas how you will pick your pairs. Step 3 is decide how much currency you need to trade. So here you will decide the position size or how much you want to risk. When you open MT4, you will see that each standard lot is 100,000 units. Okay, this is if you have a standard account, it is each lot is 100,000. That means if you put one standard lot as long, that means you are buying 100,000 euros. As we have seen in our previous webinar, you will not pay the whole amount if you trade on margin. You will pay maybe 1% of it, 0.5%. It depends on the leverage. Mini lot, that means each one lot is 10,000 now. This is a smaller account. Micro lot 1,000, nano lot is 100 units on each pair that you trade. Step 4, here where you will execute, as I said, if you want to go long, that means you're expecting that the market will go up. If you go short, that means you're expecting that the market will tumble or go to the downside. So, example, let's say the Euro USD today is 1.05 and you decided to buy Euro USD because your analysis is telling you that the Euro USD will go to the upside. So you went long, and let's say your analysis was right and the Euro went from 1.05 till 1.07. Here you will make money. Okay, so you can see that this appreciation from 1.05 till 1.070, it will make you money. Okay, so as simple as this, you can make money. However, if your trading idea was wrong or the price moved against you and it went below 1.05, here you will lose money in case you were long. Okay, the second option is to go short. So let's say now the price is 10.5, but you're expecting that the price will go down. So you will go short. And here, let's say your trading idea was right and the market reached 1.03, then you will make money. However, if the market went against you and it went above 1.05, then you will lose money if you were short on Euro USD. Step 5, you should pay the spread. So there is a fee that you should pay for your broker, which is the difference between the bid and ask, or the sell and buy. So here, if we look at this image to the right, we can see that we have sell and buy, or bid and ask. The difference between them is 1.4 pips. So you should pay this amount to your broker whenever you execute a trade. Step 6 is to close your trade, whether it is in a profit or a loss. So whenever you close your trading idea, you know that you have a loss or a profit. Okay, as long as the position is open, you will see if the position is negative or positive. But however, this is not realized as a profit or loss. You should close it to become realized profit or loss. So you should be aware of this. You should close to realize a profit or a loss. I will talk a little bit about the cost of trading Forex. We have 3 types of cost. We have spread fee, commission fee, and rollover interest fees. The spread fee, we already showed you what is it. The commission fee, it is like a fixed amount of money. It's a very small one that you pay whenever you open a trade. But the good thing is with OneRoyal broker, they have a zero account. It's called zero account, which has no commission. So you will not pay commission. You will pay just the spread. Okay. So in the zero account that they have as broker, you will not pay a commission. You will pay just the spread. The rollover interest fees is the fee that you will pay if you leave your position open overnight. Okay, so this is it when it comes to the Forex cost or cost of Forex trading. Now I will go to an example on MT4 to show you how to open a trade and give you a real example. So I will go for example here. Let's see the Euro USD, and I will give you how you should open a position, how you close it, and how you will see the profit and loss. Okay, so here we have the Euro USD on the 4-hour time frame. It doesn't matter, it's just an example. Please do not take it as an investment advice. It's a very simple one just for showing you an example. Okay, guys? So let's say now the Euro USD, it's starting to go up, and you would like, sorry, this is Euro AUD, and you would like to take a trade. Before this, I will show you where to pick a Forex pair. So when you open your MT4 using OneRoyal platform, you will go here. You can see all the available currencies, even we have crypto, commodities, US indices. So here you can pick as well all the FX pairs. These are cross one here. We have some exotic. So any currency pair that it comes to your mind, it is available. Let's pick the Euro AUD. It's already there. So after picking your currency, you should do an analysis to be able to either decide to buy or to sell. So the market is about to move to the upside. Let's consider this our analysis. So it's better to buy. So what you do is you will put right click here, or you can press new order here. Okay, so either you press right click on the chart and you will go for open it, a trade. Let me try to see what is. Okay, sorry, here trading, new order, okay? Or you can directly press this here to the left. Anyway, so here the Euro AD, this is the volume that we were talking about. So after considering either we are going to buy or sell, we decided to buy here. You should put your volume. You should decide how much you need to buy as Euro AD. If you put 1, that means you're trading 100,000 unit of Euro AUD. Okay, I will show you how you will be able to find this 100,000 to see, let's say, to know what is the standard lot, or if you have a standard account or a mini account or etc. So let's say Euro AUD, and you would like to know the standard lot, how many units it has. So Euro AUD, it's here, right click on it, right click on Euro AUD, you will go for specification, and if you go to contract size is 100,000. So each one contract is 100,000 units. So back to our example, new order, let me put an order of, let's say, 1 unit of Euro AUD, and now we are in a position. If you look to the downside, we are long, or we bought Euro AUD, okay, at a price of 51.48.6, and this is here the current price, 51.490. It fluctuates, so I cannot know. So if you look to the right, we have the profits. The market now is fluctuating, so we have a loss of now a profit of $2, okay? So if you look here, there is a difference between the number above and below. This is because of the fee that you should pay, okay? So this difference is the fee that you should pay, okay? So net profit is 16 or around 15 now. So either you will leave it until the market go up and you make more money, or you decide that, oh, this is a good amount of money for me, let me close it. You will close it by clicking this X here that you saw it. So by clicking it, you made some money, okay? So this is it mainly for go long. If you want to go short, that means you're expecting that the price will go down, you will do the same, but you will press sell. So you order on, let's say, take another pair here, let's say Euro USD, new order. I right click on Euro USD, I will sell one lot of Euro USD and I will press this button here, sell. That means that I'm expecting the market will go down. So by pressing this, okay, you can see here that we are in a negative PNL. Okay, there is a difference between this number and above one. It's normal. This is the fee. Let's wait for a few seconds, so maybe it will go down, but for now it is negative. The market is moving a little bit to the upside. So when the market is moving to the upside and you're short selling a currency, so we sold, but the market is going to the upside. So as you can see, the market is going to the upside, but we decided to sell. So the market is going against us. We should pay some certain losses. So we have losses here because the market is going against us. If the market reversed and went to the downside, then you will start to make money on this short sell order or position. So this is it mainly for how to trade Forex. Let me close the position. You can click on the X here. And now we have a closed order. Now we will take your questions. We will wait for them if you have any, and we will end after it the session. So please let me know your question. If you have any doubt, please. So I will wait a little bit. Meanwhile, if you would like to trade Forex, as we said, you can go to OneRoyal website and start to trade and open an account. So you will start trading. How to choose which currency to trade? Okay, mainly I prefer to trade the major pairs because they have lower spread. That means lower fees. Okay, so as a beginner, it's better to choose the currencies that are major ones. We're talking about Euro USD, USD CAD, because they offer lower spread. That means lower fees for you as well. Okay, so I don't know if you mean technically how do you trade them. If you're asking in this way, you will go through these pairs, and based on your strategy, you will pick a pair to trade. Okay, so you will have one strategy, and then you will scroll through these pairs, and you will pick one that fits your strategy, and then you will have a pair to trade. Okay, guys, so we will end our webinar for today. Thanks for attending, and we will see you on Monday or on Tuesday, sorry. Have a lovely day.